If I were you, I would definitely pay attention to what's happening with the US housing market. Right now, there's a lot of interesting things happening that will most certainly decide the fate of the US housing market in 2021. If you've been paying attention to the market, you know that the United States housing market is possibly forming a housing bubble that could pop in late 2021. As you know, with housing markets, it's not a very quick process. You see, housing takes a very long time to process. Houses can take anywhere from 2 weeks to 2 months to sell. Therefore, the effects of a housing market are going to be seen over years and not days. You see, if you're paying attention to the housing market, you may realize that a bubble is actually forming. And there's a lot of evidence on the internet to support this. Now, this isn't just evidence from random people. These are actually financial institutions and those who are actually in the real estate sector. So I would most certainly pay attention to this information. If we look at what Zillow posted on the 23rd of September 2020, which is yesterday as of recording this video, it states that home sales activity continued its stellar run into August, and for purchase mortgage application activity reached recent highs. But increased rates of business closures signal that broader portions of the economy continue to struggle. So, what it's saying is that homes are continually being purchased at record high rates, even though businesses are struggling and the rest of the economy is actually going down. So you can see that although the economy isn't actually representative of the housing market, what is happening is that a lot more people than necessary are actually buying homes. Now, this is very, very worrying because we're seeing this trend from many different sources. The total mortgage applications have risen 6.8% since last week. Knowing what's going on with the interest rates, you can understand why. Interest rates are at record lows, meaning that right now it's actually much more attractive to the average person to be buying a home. You see, when interest rates are at record lows, such as now, it actually means that in the long term, this is the best time in a very long time that there will ever be to actually purchase a home. And opportunities like this don't come around often. So if you're an average person sitting on the bench, even if you wanted to purchase a house and you were probably delaying it for a year or two, you would probably actually be looking to purchase your house now rather than later, simply because the cost of purchasing a house right now is at the lowest over a 30-year period it will ever be. So what this actually means now is that houses are actually in even more demand. You see, before there wasn't really a demand for houses. So what happens now is that there's actually a very high demand for houses. You see, according to Zillow, and if you don't know what Zillow is the American online real estate database company that was founded in 2006, and they have a lot of data on real estate. So when you're looking at companies like this, you can take their data and know that it's pretty much accurate. So according to Zillow, the data shows that the August existing home sales rose 2.4% from July and 10.5% from a year ago to 6 million. According to the National Association of Realtors, the highest level since December 2006. And we all know what preceded December 2006 is the 2008 housing market crash. Now, this is very, very interesting because if we all know what happened in the 2008 market crash, it's not hard to see how something like that can happen again. You see, the thing is, with the 2008 market crash, it was simply due to supply and demand and how many people could actually purchase a house versus how many people could actually pay for the house. So what we're seeing right now is a lot of people right now being able and more attractive to the common investor, which actually leads me to be very worried because anytime you have a large surge in the amount of people applying for mortgages and the amount of people buying houses, we know that once there's the increase in demand, then there's going to be an increase in the price of that thing which their demand is. And we all know that houses are not something which can be built in a day. Houses take a very long time to build, which means that when the demand increases so quickly, that means the price also has to be adjusted because houses aren't something that can be made quickly like I just said. It's something that takes a very long time to build. So when you have things that take weeks or months to build, but you have a surge in the demand for them that's only taken a couple weeks, you're going to see the price go up quite a bit. And if the price goes up without reflecting the actual true intrinsic value of that property, then you have this slow bubble which slowly begins to form. And what's even worse is that the Federal Reserve did state that they're planning on keeping interest levels low for a very long time. Now, I don't know about you, but interest levels being this low for a very long time can actually extend this bubble, and I'm not sure if the bubble's coming in 2021 or not, because with how coronavirus is impacting the markets, we will still see many different things come into play. You see, there may be another lockdown, there may be a second wave, the virus may mutate. There's so many different factors that could come into play, and to be honest, we don't know whether these factors are just our human fear or something that we should genuinely be worried about. However, if you don't want to take our word for it, you can look at what Reuters said, and Reuters have said the housing market has continued its remarkable recovery amidst an otherwise fraught economy that has been battered by the pandemic. However, we should continue to be paranoid about the sustainability of sales. With lack of housing supply, there is an upward pressure on home prices, which threatens to detract the benefits of accrued from low mortgage rates. So basically what this is meaning is that because the mortgage rates are lower so that more people can actually get homes, what's happening is that the lack of the housing supply, remember when I said earlier that houses take a very long time to build, so if there's a demand, the price is going to shoot upwards quickly. Because there's an upward demand and because there's not enough houses to go around, although the government's incentive to help people to buy more homes with the mortgage rates being lowered isn't actually working because there's not enough houses. There's actually a lack of housing supply, which does mean if there's a lack of housing supply and increased demand, the price will go up even further. And it's just a nice byproduct that the interest rates are low, which means even now the demand is going to be even stronger. So we can see that this demand is probably not going to be long-lived, meaning that if it continues at this steady pace, that we could see a bubble forming. And when that bubble will pop, we don't honestly know. Because right now, like I said, the financial future is uncertain. We're only around 8 to 6 months away from the initial breakout of this pandemic, so we don't really know how this is going to impact us for the long run. We can only try to predict and try to hope that the bubble doesn't break and doesn't pop too heavily.